Okay, good morning everyone. Well, what I'm going to talk about this morning is that actually we do need to do things differently, but that if we carry on doing what we've always done before, which is always very tempting, you're actually going to get less of a result. And I think that plays to some of the stuff that John was talking about and certainly some of the stuff that Clem was talking about. So what I want to cover is a little bit about our industry and what's going on externally out there, because I don't think we can divorce insurance from what's going on in the outside world. And too often we live in our own little bubble and we forget about what's going on outside. And I want to talk about the difference between what I think, certainly in the commercial market, the approach that we need to take to simple products and complex products. Because actually I do think that there's a very big difference that we need to adopt and that we need to take to the products. And it really plays on the social network and e-commerce world in which we live and the fact that actually this is still very much an intermediated business. And then a little bit about working together, and by that I mean broker and insurer. So, okay, what is the insurance industry today looking like? Now you may think these are slides from the 1970s actually, having been a broker for 5 years before coming back to AXA in February. This is pretty much what it looks like in most brokers' offices. That's the picture there on the left. On the right, that's a good Saturday night out for most insurance companies. But in fact, what we see still very much is that insurance companies and insurance brokers are still very much adopting old-fashioned processes, old-fashioned technologies, and old-fashioned approaches to pretty much everything. So it is still very much a dated approach that we have, in particular in commercial life. And actually, despite all the great stuff that Clem just talked about, the fact that, you know, and we have here the London riots and the response to the London riots, we have a very, very mixed reputation, and we shouldn't kid ourselves that it is any different to that. We have a reputation for fantastically responding to claims catastrophes, whether they be weather-related or terrorist-related, or here, you know, in the riots. However, we also have an ability to shoot ourselves in the foot enormously with things like the PPI scandal, the referral fee scandal, and we should not forget that when customers are looking at the insurance industry, they are seeing the stuff on the right more than they're seeing the stuff on the left. And therefore we may sit all here with our high convoluted strategies, but actually the customers that we deal with, whether they be commercial or personal customers, are looking in on this industry and saying, what the hell is going on? And therefore that is the context in which we're operating. But I'm not suggesting that we should go out there and adopt some high-risk strategies. I mean, we could adopt the Lehman approach to, you know, going into subprime mortgages or not having any sort of protection of your balance sheet. Or we could do as Marconi did, and at the end of the Cold War decide that defence was a thing of the past and we were living in a safe environment. What a stupid strategy that was. But I do think that we do need to evolve. And my analogy here is we should be more like Apple, who have taken themselves through different cycles of their business, from setting up the business in 1976 to nearly going bust at the end of the 1990s when they went into sort of, you know, big hardware and service stuff, to the company that they are today when they could have pretty much bailed out the American government a few months ago with the cash that they have sitting in their coffers. But we do have to be less like Woolworths. And, you know, if you think about Woolworths, it had 800 stores at its peak. And, you know, when I was a little girl, we used to go in there and buy pick and mix and do all of that and buy your CDs. But in fact, if you went in there just 12 months before it went bust, you sort of knew it was going to go bust because it just didn't stand for anything anymore. And we need to bear that in mind when we're building our businesses and think about what actually is it that we stand for. And actually, you know, I won't go through this in any great detail because I think Clem has articulately built it up, but we are living in pretty uncertain times. These are the things we're frightened about. We're worried about the economic situation. You know, I look at the AXA share price every day and it's like this. It's unbelievable. You know, you just have no idea what it's going to be day in, day out. And then we've got the catastrophic events, you know, the ones here in the UK last year. This is Japan, New Zealand, Chile, you name it. We're sort of getting hit by it from everywhere. And then the things that we sort of weren't expecting. So I guess perhaps the black swan. You know, we weren't expecting the riots, but they caught us all enormously by surprise. Yes, we responded to it. We did a pretty good job of that. But that was a new phenomena. You know, is that going to reoccur? So what happens there? So we worry about those things because we sort of know, and we sort of think, oh God, you know, what if that happens again? And then the man-made events. And I was reading at the weekend, cybercrime could cost £1 trillion globally. So, you know, that's perhaps the new terrorism. We simply do not know. But then there are things I think that we sort of look at that actually we should be worried about, but we probably aren't worried about. So we look at Facebook. You know, Facebook, oh, what's Facebook? It's the things that the younger people do, isn't it? It's what your kids do. They come home at night. But actually, there are 800 million users of Facebook. If Facebook were a country, it would be the 3rd biggest country in the world. Well, that's pretty powerful, isn't it? So 800 million people using Facebook. And then you look at Twitter. Okay, Twitter, what's all that about? I don't understand it. You know, David Williams is AXA's very own Twitterer, or Twit as we call him. But, you know, there's all this phenomena. This is a phenomena that's going on. 200 million people use Twitter. You can watch X Factor on Saturday night. I'm sure you don't. You know, maybe you do. And you can follow what are people thinking about what's going on in X Factor. Okay, so that's it in a social networking context. But how could this be perhaps applied to a business context? And I think we should be quite worried about some of this stuff, because reaching hundreds of millions of audiences now has become something that's actually quite straightforward. Whereas before we'd have had to spend a huge amount of money on marketing materials and all of that sort of stuff to reach big audiences. And then you've got YouTube. Every minute that we're in this room, you know, 40 hours of video gets uploaded onto YouTube. Okay, you may say, so what? You've got the 432 million hits of the Charlie Bit My Finger. If any of you've got young children, I'm sure you'll have watched that. And then you've got AXA's very own launch of its MLP product, at least 15 hits, 14 of which were by the AXA team. But it has potential. You have potential to use YouTube as a way of marketing product and getting product out there, which you just never had in the past. And it's cheap and it's effective. And it doesn't come with big marketing teams and big marketing structures. And then we've got this is a worry, and this worries me quite a lot. You look at disintermediation. We've already seen it happen in personal lines, but we're starting to see it happen in some other industries. Look at LinkedIn. You know, LinkedIn is now valued at 1.5 billion. 40% of Accenture's recruitment is now done on LinkedIn. LinkedIn is now the way of doing recruitment. Is that the end of recruitment consultants? Is that the beginning of the end of recruitment consultants? Rightmove, when Rightmove was launched first, actually the estate agents had to be encouraged to put properties onto Rightmove. Now the estate agents pay to put properties onto Rightmove, and Rightmove had 7.6 billion people viewing it, 7.6 billion hits last year. Disintermediation is out there in industries that we haven't seen it before, and we need to think about, certainly in commercial insurance, is that a potential? Is that something that we should be worried about? And who saw this coming? You know, this meerkat. But the meerkat, you may laugh, 1 in 10 adverts on television is an aggregator, which is quite something if you think about the power and advertising spend. And more interestingly, I think, you know, more of these meerkats were sold this summer in garden centres than garden gnomes. My little girl nags me every night, can we switch our home insurance, Mummy, to have one of those, please? You know, so it is quite powerful, and it is very different, and we have to think about, you know, what is it that's doing? This is Stuart Reid, for those of you who don't know. So, but brokers will continue to dominate the commercial market. I think even the most pessimistic of commentators would say that yes, it's a complex product to buy, people don't really understand business interruption, public liability, all of that sort of stuff, and they will dominate the market. But if we genuinely think that Facebook generation is going to walk into a broker on a high street and say, please can you help me with my insurance, the new young entrepreneurs, we're absolutely kidding ourselves. And it's my belief that direct will take off in the commercial world in the same way that it has done in the personal lines world, because Facebook generation will look to achieve their buy online, just because that is the way that they buy things, that is the way that they communicate, and we really need to think about that in the way that we are looking and facing into the future. So what is and what should be our response to that? So I think there are 2 very different responses. I think there's a revolutionary response for simple and an evolutionary response for complex. What do I mean by that? Well, for simple products, and by that I mean your straightforward D&O, property owners, offices, shops, tradesmen. You know, by the way, those which make up 98% by policy of businesses in the UK. So UK PLC is an SME-dominated heartland. So we have to think about the fact that most businesses in the UK are pretty straightforward. They're micro traders or people with 1 to 5 employees. For those people, you just can't hold back the tide. And you see here stats from AXA which show that these are the transactions, the e-commerce transactions, quarter by quarter over the last 5 years. So it's starting to gain traction. And actually, Theo's view is that 50% of simple businesses, of business could be transacted in an e-commerce way. However, most insurers, most brokers are just not equipped for this at all. So from an efficient operating model point of view, do we have technology that's available 24/7? Do we have technology that is reliable, that allows products to be launched quickly, that basically allows you to change rates quickly? Most insurers, most brokers actually do not. They're still operating with 1970s, 1980s technology. You have to have that capability, that technological capability to respond to this environment. And long gone are the days of saying, oh, I feel that that rate for that risk might be £2,000. It is going to be much smarter than that. We're going to have a dynamic pricing expertise. So in exactly the same way as what has happened in personal lines, you're going to see a much more actuarial-based approach to commercial lines, far fewer rating factors. So, you know, the whole Polaris debacle around having 35 questions for one tradesman policy, gone are those days. The customers will not buy that way. They'll want 2 or 3 simple questions that they can answer and they can get a quote. And insurers and brokers have to get their heads around how do they get that expertise? How do they build products dynamically, you know, quickly so that we can respond to that way? Because we've already heard putting your rates out into an e-commerce environment means that it's less profitable. Therefore, you have to be able to change them quickly and you have to be able to respond to any problems that you see coming. And you have to be able to deal with referrals really, really quickly. In the commercial world at the minute, you know, if something's an e-commerce product, then you've basically got a situation where 20% goes straight through and 80% is referred. That is not e-commerce. And, you know, most insurers are operating in that environment. The dynamic has to change the other way. 80% needs to be straight through, 20% referred. And that is a fundamental change of operating model for brokers and insurers and something that we absolutely must adopt. And we have to accept and be grown up about the fact that it is going to be multi-channel. It's going to be direct, it's going to be affinity, it's going to be affiliate, it's going to be broker software house, it's going to be broker. But in the simple product world, it is going to be exactly the same way as it is, I believe, in personal lines. And therefore, for simple products, we have to adopt a revolutionary approach, more like iTunes and less like EMI. So, you know, we have to think about digital download, being able to access your policy documentation, all the details of your policy online in a really cost-effective, customer-friendly way, not, you know, a pompous insurance type way, which is the way we've traditionally done things. So for simple products, that's the way I believe things are going to go, and that is a huge proportion of the market. However, for complex products, and here I mean your commercial combines, your motor trades, your motor fleets, the stuff where people have got more assets, more employees, I think there's a very different approach. And here I wouldn't suggest high-risk technological solution. Here I use the British cycling team as a great example. If you look at what's happened to the British cycling team, they've gone from good to bloody fantastic in quite a short period of time. So what have they done? And if you read the book by David Brailsford, he's the manager of the British cycling team, he uses the expression, the aggregation of marginal gains. He didn't take that team and say something fundamentally needed to change in it. What he did was he changed lots of little things. So he stopped them wearing shorts and tops and put them in all-in-ones. He changed their diet. He changed the way that the bikes were built. Small changes which have made an enormous difference. And that is what I think needs to happen in the complex arena. I think we need to make small changes that will make a very big difference. For me, I think this is very much about being local. So those insurers who have adopted this sort of, you know, we will have a big centralized structure model, I don't think that will work. I don't think that works in a complex model. Brokers are 4,500 of them. They're all over the UK, from Aberdeen down to Cornwall. They are in local communities, and therefore insurers need to be in and active in the local communities in order for it to make it work. I also think we need to be less like the royal family, more like the royal family, and we need to make sure we're professional. We too often talk about, you know, industry, and I've even used it myself. This is a profession, and we should be proud that it's a profession, but people should have the right professional qualifications. We shouldn't be forced into that by the regulator. sector. We should be out there encouraging our businesses to do that, to become chartered, to whether you're a chartered broker or chartered insurer, and that is something that we should really be proud of. And we need to find what are the niches and specialisms. Trying to be good at everything is a crap strategy, and it works for very, very few people. Find the trades, the things, the products that you're good at, and be really, really good at them. If you look at the insurers that have done particularly well in the UK, the likes of Chubb, the likes of Hiscox, they've found their niches, they've found their specialisms, and they've evolved them, and it's been very, very profitable for them, and they've done it exceptionally well. And so for complex, I think it's, you've got to catch yourself in time, like M&S did at the start of this century, where, before that, they didn't have changing rooms and they didn't take credit cards, if you remember. They've completely evolved that business, and perhaps less like Nokia, in that, when the CEO was writing out to his business not that long ago and basically said, we're buggered, unless we do something very, very quickly. And I see that they're just about to launch their smartphone, so maybe that's their salvation, who knows. Underpinning all of that, I think there are two things. The first is that the basic proposition has to be right. The service has to be good, the availability has to be good, the technical expertise, the balance sheet, all of that sort of stuff. And I use Virgin as an analogy here. You get on a Virgin plane, you can turn left, which I don't do. I'm sure there are some people who do, but I don't. Turn left, turn right. But the plane leaves at the same time, arrives at the same time. The basic proposition has to be right. Whether you get your massage and your champagne or not, that's up to you as the insurer, up to you as the broker, whether you want to pay for that. But the basic assumptions need to be the same. And of course, the most fundamental thing, which is our shop window, which we just do never talk about enough, is an excellent claim service. At the end of the day, that is the moment of truth. That is what really, really matters. And insurers too often focus on underwriting, too often focus on product, and don't focus enough on the claim service that they're giving, which is absolutely fundamental to what you do. So, is it time for change? Yes, I think so. I think there's a combination of revolution for the simple products and evolution for the complex products. I think that for insurers and brokers, we have to live together. It has been, with the rise of the consolidators and with some of the other things that have happened over the last few years, very much like this. And I think it needs to be far more like this. And so, perhaps not quite, but more working together, identifying what the issues are, and making sure that we don't just keep repeating the mistakes of the past. So, thank you very much for listening. I appreciate that.
Thanks, Amanda.